Hey guys, good afternoon, everybody. It is Monday, July 24th. It is 1 p.m. right now. Our scheduled mentoring sessions for 1 p.m. So we got a few minutes till then. I'm just gonna set up the room real quick and we'll get started shortly. If you guys have any questions, feel free to put them in the chat now, and we will answer the questions in order that they come in. So just give me a few moments to finish updating the room real quick, and we will get started shortly. All right, a few more things here to update. And we should be good to go. All right, let me get this link sent out to you guys here in the premium. Link sent out. Here a few moments for people to make their way in, and we will get started shortly. All right, guys, I'll give it a few moments for people to make their way into the room. Today is Monday, July 24th. It is 1 p.m. right now. Our scheduled mentoring session for 1 o'clock. So if you guys have any questions, feel free to put your questions in the chat. I think the main focus for today is probably going to be the 5-minute momentum pullback scalp. It's pretty much the same strategy, guys. I gave you guys a little preview today during the live session. It's just a few changes that that need to be made when applying it. So, everybody has gone. Hey, Kaner, CJ, Karen, Surin, everybody, good afternoon. All right, so I'll give it a few more moments for people to join in, guys, and then we'll get started shortly with the explanation of the 5-minute. Yeah, Surin said you missed all day today. We'll go over in detail. Hey, Shiv, how's it going? Shiv, if you want to hop on the Zoom, because I see you're on the YouTube. If you want to hop on the Zoom, the Zoom link was posted in premium groups. So if you want to hop on there, Shiv, because the YouTube is a little delayed if you're on there. Hey, John, how's it going? All right, guys. So looks like pretty much majority of you guys are here. So I guess we can start off by looking at the entry that came up today. So start off over here. The entry happened, I believe, like right here, I think. Let's see, so we're gonna push the upside right here, price to trace down. There's no entry there. Price came up here, and then I believe our entry happened at this level right here, right? Yeah. All right, so I'll put up the criteria over here for the 5-minute. Sorry, guys, looks like majority of you guys are here. So good afternoon, everybody. It is Monday, July 24th. It is 1:03 p.m. today. Our scheduled mentoring sessions for 1 p.m. So if you guys have any questions, feel free to put them in the chat. Our main focus for today is going to be reviewing the momentum pullback scalp strategy, except it's going to be applied on the 5-minute. So it's a small change to what we do on the 1 minute. I think the 5-minute is actually better because it's not as rushed. we have like 5 minutes in between each candle versus the 1 minute candle. The only problem with trading this here is that there's no fixed TP stop loss, and I'll show you guys how that's done shortly. So, all right, let me put the criteria up here for the momentum pullback scalp. And I'm basically going to create another one, but it's going to be called momentum pullback scalp 5 minute. Momentum pullback scalp 5 minute time frame. All right, so I mean, it's pretty much the same thing. It's nothing too crazy. It's just so first, identify direction of momentum plus trend using momentum, or I'll just say identify using momentum. I don't need to necessarily say, or I'll just say K plus K2 pivots. K2 trend here. So I'll make it as detailed as possible so that you guys can see. Second, identify push in that direction. 3, identify pullback retracement. 4th, enter at the nearest the 80, 90. 5, set CP stop loss at current ATR. So this is where it's different. 6, exit trade if opposite signal appears. And I think that's pretty much it. Yeah, I mean, that's pretty much it. All right, so as you guys can see, the strategy is nearly identical. It's like literally the same thing. The only difference is that for the momentum pullback scalp on the 1 minute, we're typically taking 1 entry per momentum. With the 5 minute, we could take multiple because you can see like how this momentum signal pretty much it ran for a long time, right? So the main difference is there's no set TP stop loss for the 5 minute because it's going to vary depending on like what market is. You're going to use the ATR to identify that. And other than that, I think that's pretty much it. It's really just, you can take multiple entries per momentum, and then your TP stop loss is just not fixed. It's easy to apply when you're trading on Top Step. So again, guys, if you guys are still looking for a prop firm to use, my main recommendation is probably going to be Top Step for now, because I think it's the easiest way to trade it. That's how you're going to figure out what your TP stop loss would be and what your contract size would be as well. So, all right. Let me just delete this so that I can show you guys an example. This is the entry that we took today. So basically same strategy, which is different time frame. Instead of trading on the 1 minute, this is applied on the 5 minute. If you guys look at the screenshots from today. Perfect. Yeah, Shiv. And I'll look at that later, Shiv. So for the entry that we took today, it was this one right here, the same one that I have marked up. This one hit full TP. And that's how pretty much I locked in all these profits from today's live session. I just took 1 trade today. Market was kind of choppy. This is my Top Step account. And I got kind of like screwed up like when I took the trade, because when I set the trade, if you guys were on the live session, it took the trade. And then what happened was it didn't show up on my screen. So the only reason I knew I was in the position is because I had my Top Step account open, and it said order filled when price came down to this point. So we'll go over this step by step, show you guys exactly how it's applied. And then I'll try to look for some more examples. I don't think there were any more examples for today specifically. Well, actually there was like 3 back-to-back entries that came up. We only took the first one, but I'll show you guys different examples of like how it's applied. So the first thing you want to do when applying the strategy is to confirm the momentum and trend. So you want to confirm the direction, and you want to make sure that the momentum and trend is going that direction. So first you want to use the momentum indicator to identify which direction momentum is going. So for example, right here, we have a buy signal using the momentum indicator. So we're obviously looking for a buy here. Next, you want to confirm the trend. So using the K2 pivots, you can see over here that price is above the pivots. Pivots are angling up. This is going to confirm that price is in an upwards trend. If price is below it, then it's going to be in a downwards trend. So with that said, we already confirmed here that price is bullish because price is above the pivots, trend meters, and the pivots are angling to the upside. The next thing that you want to confirm, it's not necessary to have both, but it'd be better if you did have both, is to confirm the trend meter. So down below here, we have the trend meter set to chart. And as you can see over here, you want to make sure that the trend meter is green. If it's green, it means it's bullish. If it's blue, this means it's neutral. If it's red, this means it's bearish. So with that said, we have bullish momentum here. We have the price above the pivots. We have the pivots angling up, and we have the trend meter down below, which is also green. So with that said, we have a pretty obvious bullish direction right here, right? Momentum is going to the upside. Trend is going to the upside. We're obviously looking for buys here. So once you confirm that step 1 right there, you can move on to the next step. Next step is going to identify a push in that direction. So just looking back at these previous candles right here, you can see that price is pushing to the upside, right? That's going to be step 2. Pretty easy, pretty self-explanatory. Once you confirm those 2 steps, you move on to step 3, identify a pullback retracement. So you can see how price is pushing up right here. And this red candle right here is going to be the pullback retracement because price is pushing up and this candle is now pulling back and retracing, right? Once you confirm that, you're going to enter at the nearest 0, 0, basically the nearest 10. So 0, 0, 10, 20, 30, 40, 50, 60, 70, 80, 90, 100, wherever it lands at. So this candle right here retraced down to the 49 mark, right? So if it retraces down to the 49 mark, your entry is going to be down here at the 40 mark. So you're going to the whole number. You're not going to the one that's, you're basically going to the one that's nearest behind, not the one that's above it, but whatever is nearest behind it. So if price came down here, then your entry would be at 30. If price was up here, your entry would be at 60. Since price closed right here, there's 2 points of entry. You could have entered right down that specific line, or you could have waited for price to come down here. When we saw this candle close, price was actually down here and it pushed up at the very last second. So where I put my entry was down here. So my entry happened right here. And now once you've identified where your entry point would be, in order to identify where your TP stop loss is, you'd use the current ATR. So to find the ATR down here, just go to your indicators, type in ATR. It's going to be called average true range. It's a built-in indicator for TradingView. So it's built in, you don't have to, it's not an extra indicator or anything like that. It's just average true range. This average true range is going to show you where price is ranging within the previous X amount of candles. Default settings is set to 14. I just leave it at default. It's not really a big deal because you're just using this to identify where the range would be. So just leave it at default. Once you've set it up like that, you can see down here that it says 29, right? 29 points. So with that said, your TP stop loss here is going to be set to 29. That's pretty much how we set it up right there. And that's how we pretty much set it up over here as well. That's where the entry is, right? Once you have that set up, you just let the trade run. So price goes forward, it fills the entry. This is where we were in position now. Price kind of went sideways for a bit, pushed up right there, went sideways for a bit, and eventually it went up and hit full TP. So there goes the example of the strategy. It's super simple. I mean, it's pretty much the same thing. The only difference is that you can take multiple entries per momentum and your TP stop loss is based off the ATR. If you guys are entering this type of trade, I would recommend taking it at a 1% risk. It has a very high win ratio. So, you know, if you're looking to pass your top step, you only need like about 9 or less wins. So you have 9 good wins. There was about 3 wins that came up today. We only took 1, but there were about 9 entries that came up. So, you know, you would have been like halfway done with your top step at that point if you were to do 1% risk. On my FTMO, unfortunately, like there's no way to really set percentages when you're entering the trade unless you have a third-party platform. So for me, I'm taking about a 1.5% risk when I'm taking these entries on my FTMO. Today, I didn't have the opportunity to make the changes because I kind of screwed up. And just wasn't prepared during the live. So I took it with my normal 200 lot, and I locked in about 2,000. But generally, when I'm taking this trade here, I'm going to be aiming for about 3,000 per trade on my FTMO. Taking a bit of a higher risk because, the MT4 accounts are a little more risky in my use versus the Top Step. So for Top Step here, I'm going for about like 1%. So I'm on 150K account times 1%. I'm going for about, actually not that, 15. Going for about 1,500, so about a little bit less. Your goal on the 150K is gonna be 9,000. So divided by 1,500, about 6 wins. You just need 6 wins. That's how, it's like literally all you need. You reach that and you're good. You're gonna pass your Top Step like pretty easily. So there's really no rush because these entries come up multiple times. So, even if you have a slow week, you might have a day where you have like 2 or 3 entries. You really just need 6. So you can probably pass your Top Step within a week or 2, maybe like within a month if you take your time, but super simple. So we're just trading based off risk, doing a 1% risk per trade. And that's pretty much how the strategy works. So let me see, Steve's asking, Sean, is there a minimum number of ATR should be at before you take a trade? I typically look for about like 15 points, Steve, because if it's anything lower than 15 points, then the volatility is going to be too low, right? If you're going for like 100 pip or 10 points or something like that, you need to cover the spread as well. So you want it to be at least above 15. If you look at the ATR right here, see where it's like 28. If you're trading during live session times, the ATR is always going to be high because volatility is high at that point. But if you go over here, so look at pre-market at 5 o'clock. Look at the ATR now, it's at 11, right? I wouldn't trade during that time because market's not really moving too much. You go even deeper into like, say London session, the ATR over here again is only 9 points. So it's kind of pointless to trade during this time because even if you're going for 100 pips, your TP is probably not going to get hit for hours, right? So it's not really worth the risk. You can see over here from 3 o'clock up until 5, the ATR barely changes. So you want it to be at least 15 or more. So you see over here, market open at 6:30, ATR is now at 27. Easy to get in and out of these positions because the market's actually moving. So yeah, minimum ATR would be about like 15 points. All right, let's see. One more question from William. William is asking, okay, got most of this. Can you go over criteria number 3? So criteria 3 is just to identify a pullback retracement. You're just looking for an opposite candle. William, super simple. Like, don't try to overcomplicate it. It's very, very simple. Like, for example, so the entry happened right here, right? Or this is where you were going to make your entry. Price is pushing up. You get a red candle right there. That's the retracement. Doesn't need to be a super far back retracement. You just need to see price pull back a little bit, because when you see something like that, price pulls back slightly, it'll fill your order and then it goes straight to your profit as it continues pushing up higher. So it's not really that difficult. It's really just identifying an opposite candle, especially on the 5-minute, because so on the 1 minute, you see a bit of a mess because there's so many candles that come up. Like sometimes you'll get like a couple of red candles, and you can't really determine exactly where it's at, right? But if you have this on the 5-minute, you know, one of these candles is 5 1-minute candles. So you have a better understanding as to like where the retracement is actually happening, or pullback, whatever you want to call it. Does that make sense, William? Just want to make sure before we move on. Yeah, no problem. It's super simple. Let me go to another example here, and then we'll look at it again. All right, so again, right here, price push through. All right, so price pushed up again right here, right? So we're looking again for another opportunity for entry. Price pushed up right there. You have a retracement right here. Entry for this candle is going to be right there, right? So let's go over the steps again. Let me just delete this so there's no mess. We'll look at the steps again. First, identify direction, momentum, and trend. You can see that the momentum and trend is still bullish, right? We have a bullish momentum right here. Price is above the pivots. Trend here is green. Pivots are angling up. We're still looking for buys. Identify a push in that direction. You can see right here that price is pushing to the upside. Step 3, the one that we just covered with William, identify a pullback retracement. Price is pushing up right here. This red candle right here is pulling back and retracing, right? So with that said, this here pulled back to 68. Your entry would be at 60 down here. So this is where your entry would be at the nearest 10th whole number. Your TP stop loss is going to be set at the current ATR. If you look at the ATR right here, it's currently 27. So we're going to set this to 27.27. Once you have that set up, you let the trade run. You can see right there that it filled the order. Trade is now filled. It's now in profit. Price pushes up, full TP, easy money right there, right? So right there, you would have had 2 back-to-back wins, and that would have been a 2% increase. 2% increase on Top Step, 3% increase on FTMO. At that point, you would have been almost done with your, even halfway with both of your accounts. Halfway with Top Step, halfway with FTMO if you're going for 8% or 10%, whatever type of funding company you're using. I mean, it's pretty simple. If there's any other questions regarding this, guys, let me know. I mean, I try to make it as simple as possible. It's not really a difficult strategy. It's really just executing and understanding like where, because the thing is like, you don't have to like think about what a retracement is or what a pullback is. It's just an opposite candle. So like price goes up, you get a red candle, it's going to be the pullback retracement. Let's see if there's another one here. Yeah, no problem. Yeah, William said you make it simple. I just had to hear it again. Yeah, no problem. A lot of times that's just the case, right? It's just, you just have to hear it to really get it down. I think there was another opportunity right here. So let me see. Let's see, question from Paul. Paul's asking, so on FTMO, also adjusting our TP stop loss based on ATR. I mean, you're not going to be using the ATR on FTMO though. Everything is going to be done on TradingView, Paul. So nothing really changes on FTMO. Everything's done on TradingView. If your TP stop loss here is 27, your TP stop loss is going to be 270 on FTMO. Does that make sense, Paul? Because you're not doing anything on FTMO. It's really just executing your trades. Does that make sense, Paul? Or if you need me to explain it in a different way, because I'm kind of confused with your question too. Because so Paul, your question is, so on FTMO also adjusting your TP stop loss based off ATR, it wouldn't make a difference because your entry on TradingView is going to be same as your entry on FTMO. You're not adjusting anything really. There's no fixed TP stop loss here. Does that make sense, Paul? I mean, you would still change it either way. It's the same thing. So if you had 270 here, you have to change it on the, you wouldn't have a fixed TP stop loss on the quick trade manager. So you have to change it. Does that make sense? Because there's like nothing that, yeah, you have to do it manually. That's the thing. So like unless you're fast, then just don't do it on your FTMO. You should be able to do it fast enough because it's not that difficult. You're just changing a few numbers. There's just no fixed TP stop loss. Like you're going to have to put trade manager there, but you're not just going to hit buy or sell because it's not always going to be the same. So like, for example, the last entry, the first entry over here was 29. The second entry is 27, right? It's off by like maybe a few pips. Like, so if it's 29, it's 290 pips. If it's 27, it's 270 pips. So it's not really the thing that you really need to understand is going to be the lot size. Because for me on FTMO, I pretty much made adjustments for lot size based on the stop loss. So like, or the TP stop loss. So for example, I have a set lot size for 300 pips. I have a set lot size for 250, and I just plug and play like whichever one I want to use. It's never going to be exact because you can't do it exactly. Like if you're trading on TradingView with Top Step, you can just put 1% in there and it'll set your, so let me just show you real quick. So say, for example, I wanted to enter a trade right here, right? I'll hit buy. And then say my TP stop loss was 27, right? I just put my risk right here, 1%. It's going to automatically set whatever my unit size is. I don't have to do any math there. It's automatically set. For example, if it's 350 or 35, I do the same thing. It's just 1%. It changes my contract size to 8. So you can't do that on FTMO. That's a problem, right? I mean, it's not a big problem, but you'd have to be prepared for it. Like you can't just enter a trade at 200 lots and then your stop loss is like, 300 pips, you're gonna blow your account if it goes too far out. So just make sure that you're cognizant of that. Like you have an idea what your lot size is going to be. what your lot size is going to be when it comes down to it. Yeah, no problem, Paul. Just want to make sure you get it because I feel like a lot of these little things like confuse people the most. So I want to make sure that you get it and everybody gets it and there's no confusion there. Because the last thing I want is for you guys to be confused when you're applying this yourself. Gotcha. Okay. Let me go. I'm gonna scroll down a little further. See what else we've got here. Cern's asking, are you still splitting FTMO accounts to 100K? I haven't done it yet, Cern. I still have 200K accounts on my FTMO. So eventually I should split them up. I just haven't gotten around to it. Because the thing is, when they split it up, they have to do it around my payout time. So because the thing is, I kind of split it while I haven't been paid out yet. So I would need to get paid out first and then split it up. I'm just kind of like lagging it on that because it's going to take some time. Like it'll take time for my payout to come out. So I probably won't be able to use the accounts for like a couple of days and then they need to split it. And I think I might need to sign another contract. So that's going to take like another couple of days. So if I do that, I'm going to be out of trading for like a whole week, right? It's not really that important for me right now. So I'm just keeping my 200Ks at the moment. Until like, maybe like during the holidays when you have some downtime, but when the market's really slow, I'll do it. But right now I don't want to miss out on any trades. Because if I miss on like a whole week of trades, that's like thousands of dollars that I'm basically missing out on. So I'm not looking to, I don't really need it right now. Cern said, so that would change your TP stop loss on this. Yeah, I already have a set TP stop loss. I would just use half. So for example, if I have a 200 pip stop loss TP, I'm using 150 lots. If I'm doing 250, it'll be 120. So I just divide that by 2. It's just half the account, right? So I would do instead of 150 lots, I do like 75 lots. So I would just subtract it by half. It's not gonna be like a big deal for me to do that in half. But yeah, right now, and that's good that you mentioned that because I have to make the adjustments on my MFF because I'm still taking the max lot size on that one. So thanks for the heads up. I need to do that actually. I'm gonna do that after this live session because I still have the 100K accounts with them. Actually, no, I have the 200K accounts. Okay, I don't have to make the changes not right now because I'm still in 200K with them. They just have a lot size cap, which sucks, but it'll be fine because I'm using the 200K account. So if I lose more profit on it, it's not like I'm gonna blow the account. All right, let me scroll up real quick and let's see what else I'm missing. I see your question, Madhu. I'm just gonna answer these quicker questions before I get to the Thursday. CJ's asking, is it 15 or 18 AR? 15 CJ. 18 is that's like more than enough and you need. Because the thing is, we typically go for 100 pips on the 1 minute. So 15 is just enough for you to get to at least 100 pips. Anything below that, volatility is going to be low, plus you have to cover the spread. So that's the reason why we don't really, I personally don't bother trading below 15. James said you can always get a lot size calculator for MT4. Yeah, you could, if you guys want to. I just do the math. It's not that difficult. Like for me, I have a 200K account, right? I basically just did the math before I even got on this live today. So I have a $200,000 account, right? That's the account times 1.5 or one. So basically, if I'm doing 1%, I'm risking 2,000. I'm okay with risking a little more than that, like 1.5, because it's just easy. It's not a big deal if I risk that much. Because the thing is, we can risk 5% a day, right? And I don't ever plan on losing trades. So if I do lose one trade, that's fine. If I lose 2 trades, that's fine. After 2 trades, I gotta cut it out. So that's why I'm risking a little more because I can lose X amount of profit, 10,000 a day, right? So for example, if I'm doing 10,000 a day, if I do 3, so if I'm doing 1.5%, I'm risking 3,000. I can lose like 3 back-to-back trades before I have to call it a day. But I'm never going to get to that point. If I get to like two bad trades or 1 bad trade, then I'll probably just wrap it up for the day. It just depends on the market conditions. All right, let me go down a little lower. Yeah, Shiv said under 15 ATR. Do not trade under 15 ATR. Basically, too low volatility. Yes, that's correct, Shiv. Because the thing is, if you're trading with ATR below 15, then you're probably gonna be holding on to that position a lot longer than you want to. And you're not gonna want to hold on to a position longer than that because it's just gonna go sideways and then it'll spike either to your TP or to your stop loss. So you'd rather just want a market that's continuously moving so that you can just pull back, hit your TP, get out, wait for the next entry, versus getting in and then market just goes sideways for like a good hour and then you're kind of trapped in that position. So 15 ATR is going to be the minimum. Nadia is asking, Sean, this may be asked already, but how do you advise we enter on MT4 for FTMO? I just enter manually. So if I hear like if I'm entering a trade here, because I typically order on here first on TradingView. So I enter on here first. If it says order filled, then I'm hitting buy or sell on my FTMO. That's how I take the trade. That's how I've always taken the trade, even like before I even had order filled. Everything was done manually through the quick trade manager. So nothing's really changing. I'm trading the same way I've been trading for years. Nothing's different. It's just that's how I enter now because I have actual noise that tells me order filled. When I hear that, I just enter the trade right away. So I mean, you can put a pending order, but the pending order is not going to be the same because the price is like way different on FTMO compared to YM. So you can't really put a pending order on FTMO unless like you're really like matching it aligned with the candles. But I would just enter manually. That's how I do it. Let's see, Shiv's asking if you do a few more examples. Yeah, we'll do more examples. Madhu asked me to go to Thursday, so I'll go back to Thursday and we'll look at examples there. One last question before I go to Thursday is from Daniel. Daniel's asking, how do I turn on the order filled sound on Top Step? So you just have to be logged into your Top Step and then have your volume on, Daniel. That's what I do. That's why I have it down here because I have it logged in at the same time. So the order will mark up on here and then it's going to also execute on the Top Step account. So when it actually executes on the Top Step account, that's where it said order filled when price gets down to your entry point. And that's basically how I do. I just follow it and I just listen for the order filled. As long as as soon as I hear that noise, I hit buy or sell on FTMO or MT4, and then I'm in the position already. So, I mean, you guys can listen for mine or you guys can listen for yours. Either or, that's how you would get it on there. All right, Madhu, let's go over to Thursday. So Madhu is asking about the Thursday market. Daniel's asking if I found a way to copy trades on Top Step without trading on TS. Unfortunately, not yet. I mean, you'd have to trade on Tradeovate. It's not even Top Step, which kind of sucks because it's like a whole different platform. And the thing that sucks about it too is that you can't put a pending order, so you can't have a pending TP stop loss. You basically have to enter manually and exit manually, which is like super annoying. So I don't know if I'll be able to use that copier, at least not for now. If anything, I might just use one Top Step account and then just trade them separately and then try to merge them, once I get it passed. So let me see. Yeah, so Madhu's asking about Thursday over here. So let me go over here on Thursday. We'll go from right here. All right, so let me put the criteria up here again for the momentum pullback scalp on the 5 minute. All right, so price is pushing up right here on the 5 minute. We're obviously looking for a buy. We have a retracement right here, right? So price pushes up, identify direction, momentum. We have a buy signal here. Price is above the pivots. Pivots are angling up. Trend meter is green. Obviously, we're looking for a buy here. Direction is bullish. Second, you want to identify a push in that direction. You can see that price is pushing up right here. Third, you want to identify a pullback retracement. Pullback retracement happened right here. at 86, your entry would be at 80. That's where entry would be. See if price comes down. Price never came down right there, so there's no entry to be filled. Price pushes back up, pushes up further. All right, retracement happens again right here. Entry point would be at 50. Long position right there. CP stop loss, ATR is set at 29. You can see the ATR down here is 29. That's where the setup would be. Bullish momentum, bullish direction, push in that direction, retracement, enter at the wholest, at the nearest whole number. CP set at 29. Okay, trade got filled right there. And it doesn't look like it plays out. So this one over here would have been a loss. It's a 1% loss. This is why it's important that you guys have the percentage proper, because if you lose one trade like that, that's just 1%. It's not a big deal. The next trade would have made it right back. So this right here would have been a loss. I can't remember if there was something going on Thursday. Let me check the calendar. I think there was news on that day, right? Or I could be wrong. I don't know. So there was news at 7:30. There was news at 7. So I don't think, what time did this come up? Yeah, we wouldn't have taken this trade right here, guys. So this loss would have been completely avoided because there was news on that day, 7 o'clock. So we actually wouldn't have taken that. It was a medium to high impact news event. We would have skipped this one right here. So this actually wouldn't have been an entry for us. I remember there was something on Thursday because we didn't really trade much on that day. All right, so price pulled back over here. All right, there's a sell signal, so there's no opportunity for entry here. Okay, here goes another opportunity right here. So the problem with this here, I don't think there was any entries on Thursday, but do now that I'm looking at it, because right here from 6:30 to 8. Yeah, it's too late in the session because this one over here wouldn't have been an entry. There was news at 7 o'clock. So like literally where this retracement happened right here, that was a news candle. So we wouldn't have taken any trades at this point. This right here is already too close to 8. I'll look for another example right here, but I mean, we'll see if anything happens. So let me see. But this is between 6:30 and 8. So technically we wouldn't have been trading around this period right here. So let's see, the retracement happened right here. If the retracement happened at that point, then your entry would have been at the 80 mark right there, because this pulled back to 95 or actually 90. All right, so it doesn't actually fill right there. It would have filled on this next one though. So, or actually, no, we wouldn't have fill on there because, so here, let me go back. All right, so the first entry would have happened right here. So right here, price push up, and then we have the retracement. Entry would have been at 90, but on this next candle right here, there's no entry, right? Because there's another push to the upside. When price pushes up again further, then you have to look for the next opportunity for entry. So price pushed up right here, everything resets. Go back to step 1, momentum direction. Price pushes back up because it's step 2 again, right? Price pushes in that direction, and then now you're looking for the retracement. So at this point, there'd be no entry. You're looking for another retracement to happen. Right here's where the retracement happened. It happened at the 87 mark, so your entry would be down here at 80. So now that price has pushed up, retraced up right here again, your entry would now be right over here. And this is what I like about the 5-minute time frame, is because you have gaps in between, right? You're not just like looking at every single candle for entry. Like for example, if this was the 1 minute, you would just leave your entry waiting. Like your entry would have just been waiting right here to be filled. If this was a 1 minute, however, this is a 5 minute. So these are each 5 candles within one candle. So with that said, price pushed up higher right here with this candle. So you would have waited for the retracement. Price retraced right here. Entry would have been at the 80 mark right here. ATR is set at 30. Let this pull through. At this point, your entry would have been filled. You're now in the position at this point. Price goes sideways for a bit. Retraces, goes right back up, full TP. So if you would have taken this trade over here, which you wouldn't have because there was news, and you lost that trade by whatever reason, if you took this trade right here, you would have made it right back. So you would have lost 1%, made 1% right here. But again, I probably wouldn't take this trade because I'm usually done trading at 8. But I mean, it just depends. You know, sometimes like I think on that day specifically, Thursday, we were kind of just waiting for an entry all day, and I actually waited a little bit. So this day was the 20th. Actually, no, I didn't. So I didn't keep trading. We took the liquidity push on open. So this is on the 20th right here. We took the liquidity push, but that was it. We didn't have any other entries that happened after it. But this is, I mean, this would be the actual entry that you would have taken if you decided to trade after 8 o'clock. The strategy, again, you can apply it like all throughout New York session. You just want to make sure the ATR is high enough for you to take the entries. If the ATR is too low, there's no point in taking it. Volatility is too low. Let's see, Medusa, that makes sense. That's what I was wondering about, but I couldn't remember if there was something going on that day. Yeah, it's usually if the market moves or if you see price moving weird like this, it's because of news. So yeah, if there's any other questions regarding this, guys, feel free to pop in the chat. If there's more examples that you guys want to see, let me know. But it's pretty simple. It's pretty straightforward. I think you guys would learn more from like practicing yourself and identifying entries yourself rather than me showing you. Because if I show you an entry, it's going to look perfect. Everything I show you guys looks perfect, right? Because I know what I'm talking about when I'm explaining it. I'll look for one more example to show you guys. Let's see if there's anything else here. Well, so the problem with this here is that this is already past 8 o'clock. So, I mean, it looks like there may have been, okay, there might be like one more entry right here. Let me just show you one more. This is after 8 though, so I probably wouldn't have taken this trade. But as I mentioned before, you guys can apply this pretty much all throughout New York session as long as the ATR is high enough. So again, right here, price pushes up. We get a retracement candle right here. This retraces down to 0.5. Your entry going to be at the whole number right there, 500. So again, right here, same thing. Bullish direction, momentum bullish, trend bullish, pushing that direction right here. Re-identify pullback retracement. This candle right here retraces and pulls back. Step 4, enter at the nearest full number, basically. Entry would be right there. ATR is currently set at 27. Small adjustment right there, 27. And it's the same thing. You let the trade run. Price pulls back. You're now in the position at this point. And you go straight to TP right there. So very simple, like little to no drawdown, go straight to TP. Basically 2 back-to-back wins right here. There's a win right here, and there's another win right here. Another retracement right here. But again, this is like kind of too late at this point. At this point, it's kind of late. Like I probably wouldn't be trading at 9 for sure. I usually would cut off at 8. Sometimes I'll go into like 8:30 if the market is just going sideways, but 9 o'clock is already kind of cutting it a little too late. Let's see, William said your AR meter is different than mine. What are you typing in the indicators? You're just typing in ATR. William, there's only one ATR indicator right here. So how does yours look, William? If you want to take a screenshot, you can say there's only one ATR indicator though. So I mean, there's like literally only one that should be picked. If you type in, you might have typed in, did you type it in wrong? art. that might have been what you typed in. Make sure it's ATR, not art. Because I've seen some people, they type in art, and yeah, that's not the indicator if you're looking at these here. There's only one indicator for let's see. Gotcha. Okay, there's only one indicator. So let me take it off real quick. All right, so I don't have the ATR indicator on here, right? I just go to indicators, type in ATR. There's only one indicator here. So like this, make sure you're not clicking on a random ATR indicator down here. You're looking at the built-in one. So you're only looking at this one right here. And that's what it looks like. Let's see, Nadia said you have to make sure that arguments is selected under status line, then titles, or else the number will not show. I don't even know what you're talking about. Nadia, I don't see that on here. Yeah, you guys shouldn't change any settings in the indicator. The indicator, you don't have to select anything, guys. Don't mess with it. Just turn on the indicator ATR. You guys shouldn't have to turn on any settings here because I don't touch anything there. It's just the default settings. Yeah, I'm not even sure what you're referring to, Nadia. On yours. General settings. I mean, yeah, I wouldn't touch anything, guys. Just leave it as is. And it should come up just like this. Like I just showed you guys how I added it, right? Nothing on my chart. Go to indicators, ATR. You turn that on, and it's already set up like that. Gotcha. Yes. And Nadia said she had to change hers because she had changed her settings. So Nadia's should be a different case. I don't think anybody else should change anything unless you mess with your settings in the past. Gotcha. Thanks, Nadia, for the heads up. I haven't ran into that, so I don't think majority of people will. But if you guys did mess with your settings, then you might have to make some adjustments. Let's see, William said. I think that should be fine, William. I don't know if like I mean, it should be fine. I don't know why does your indicator only show that? Does anybody else have that issue? Because I haven't seen that. Let me go back to. I'll just go back to current time. What time frame are you on, William? Because on mine right now, it's currently set at 14. Yeah, everyone said that theirs looks like mine. One thing that might be wrong is that you might not have updated your trading view. So if you haven't updated your trading view and like, because they've been doing updates like every week. If yours isn't updated, that's probably why it's not looking like this. I know the old ATR indicator looked like that. Yeah, you guys probably are still on the old trading view. So just make sure that you guys have like the updated trading view. I know that they've been updating the trading view pretty much every day. I don't think it makes a difference. So I think that number that you guys see in the red, that's still the ATR no matter what. Default settings are set to 14. So it should be your ATR right now should say 13. If you guys are on the 5-minute, ATR should say 13 right now. The market's closing, so the ATR is changing right now. It's 1:45, so probably in the next 15 minutes, the ATR will change back to it'll just get flat. Gotcha. You're fine then, William. You don't have to worry about it. If yours is the same number as mine, then you should be good. The ATR indicator isn't anything different. It's just it just looks a little different, but the plot should be the same because it doesn't really change very much. You know, the ATR is going to stay the same. It might be off by maybe like a point or two, but it's not going to make a huge difference to make any changes for you. All right, guys, give me 1 second. I'll be right back. Let me get some water. All right, guys, I'm back. That's what I got over here. All right, let me scroll up real quick. Let me see. Question from Silver Liberty. Silver is asking, hi Sean, planning for prop firm challenge. Do you suggest FTMO or Top Step? I would recommend Top Step for now. FTMO is cool, but I mean, it's not really because the thing is, I would prefer to trade on TradingView because you're just gonna have better entries. There's like no spread for the most part with futures, and you're trading directly with the futures exchange. So like you're not trading on a broker at all. You're kind of just trading directly with the exchange. So you get the best execution times, you get best fills, you get like little to no spread. I would just trade. So I would recommend starting with Top Step, and then after do FTMO. You can just use that as a secondary account. Because the thing is, I make most of my decisions off Top Step, and then my FTMO I just enter it manually. So for me personally, I would say Top Step, and it's cheaper. You get a 150K account for like $100. It's like 150, but if you use my code, I'll put the code in the chat. You get an extra $50. You get an extra $50 credit. And this is one thing too. So let me just show you this real quick. Okay, I put the link right there. So if you use that link, you'll get an extra $50 credit. So you'll get about 70% off already. Normally it's like $350 for the challenge or the combine. It'll be $150, and then you use my code and it'll go down to 100. So you're getting a 150K account for $100. That's like, it's a steal in my opinion. So yeah, I would probably go with Top Step first. Once you go to Top Step, because the thing is you'll make some profits, and then once you make your profits, you can just use that to buy an FTMO account. So you just get funded on Top Step, get your withdrawals and stuff, and then from there you can then go buy a FTMO account, and that can just be like your extra money account. That's how I treat it. I just the FTMO, it's on a copier. I have like 5 accounts, so I have 2 FTMOs and then 3 MFFs. That's just extra profit for me. So for my trades today, I don't know if you were following me on the live session. I made, what should I make today? So this is my main account. I made about 1,000 on my Top Step, and then these are my FTMO and MFFs. So this is just extra money basically on top. Because the thing is, if my trade gets executed on Top Step, I know for sure that my trade's gonna hit, right? Because I already know how it's working. The FTMO, it's like an MFF. They're a little, FTMO is cool, but MFF is unreliable. So if I'm like, okay, if I hit my profit on Top Step, I'm like, okay, I should be hitting my profit on MFF and FTMO, but sometimes I have to exit manually because I kind of get caught up in the position. So in my opinion, I think that's what's best. Moving forward, that's probably what I'm going to recommend to people. If anybody ever asks me, I'll say Top Step first, and then later on do FTMO, because it's just easier trading directly on TradingView, especially on the live sessions. Let's see. Dre's asking, how are you doing your Top Step? So for my Top Step, I don't know if you saw what happened last week, but there was an issue with the execution. So like, I don't know what happened, but I opened up my Top Step and I was in the negative last week. I don't know how I got in the negative, but I was in the negative. So what happened was Top Step actually sent an email out. So they sent the email out a couple of days ago, and they said, apologies and inconvenience with the platform. What they did was they offered a free reset. So what happened was I just resetted my account because it's, for whatever reason, it was in the negative. It's an issue that they're aware of. So I just reset my account. Today is the first trade that I took on the account after the reset. I reset it on Friday, and I'm currently in profit right now, about $1,000. So just a couple more trades and I should be able to be done with it. The problem with like last week was that the market was it was like super choppy. I wasn't able to execute the trades on my Top Step. So if you guys have been following my accounts, a lot of the days last week and the week before that, I had mostly just trades on my FTMO, but not on my Top Step. So I kind of got screwed over, but I mean, it happens. The good thing with Top Step though is that they took responsibility for it. So they just ended up giving us a free reset. Like that's not something that I could see FTMO or MFF ever doing. Like I don't think they'll ever give you a free reset. They're like, all right, well, that's your problem, and they'll just like make you buy another account. So that's like one thing that I like. That they're they're more on point with customer service. I mean, they're located in the US too, so they have to be on point or they're going to get hit with some sanctions. Yeah, Dre said the only thing that sucks when you get funded, there's a scaling plan. I I don't think the scaling plan is there anymore, Dre. From what I saw on their website, the scaling plan isn't there anymore. They took that off. So I don't know. I know they had that in the past, but from their FAQs, like I looked at like pretty much everything on their website, they said there's no more scaling plan. It just depends on how you got funded. So say, for example, you got funded in like 2 days, right? They're not going to trust you. So you might be on the scaling plan. But if you're like consistently profitable, like for me, if I'm just like every day locking in 1,000, 2,000 every day consistently, then they're not going to put me on a scaling plan because they know that I'm consistent. I'm not just getting lucky off like 1 or 2 trades. So I mean, I don't know how it's done. No, I'm talking about funded trade. I looked at FAQs. Like I did my research. They don't have a scaling plan anymore from what I know. But I think, well, what they said was, because I talked to their customer service too, they said it depends on the person. Like I mentioned, if you get lucky and you just pass your challenge within 2 days, you're not really trustworthy, right? Because you haven't really proven yourself. But if every day you're already consistent, there's no scaling plan. So I mean, I don't know. I could be wrong. I'm not funded yet. So when I get funded, I'll let you guys know. But from what I've read and what I've spoke to with the customer service, they said that it just depends on the person. So like for me, I'm taking my time passing, right? I'm not trying to get like 9,000 in 1 day to pass. I'm doing like 1,000 here, 1,000 there, 1,000 tomorrow. It's going to show that I'm consistent. I'm not like here taking random trades and just getting lucky with the spikes that have been happening lately. So I don't know. I could be right. I could be wrong, but I'll let you guys know once I'm at that point, because I'm taking you guys along with this journey. So we'll see what happens in the next couple of weeks or so, because I should be funded by, I mean, depending on how the market moves, hopefully by the end of August, should be funded and I should have my account ready to go. I mean, who knows? All right, let me scroll up real quick and see what else I'm missing. Let's see. All right, I see your question, Shiv. So I will get back to that liquidity. Let me scroll down real quick. There's one more question here, a smaller question from Madhu. So Madhu's asking, do you have any red flags for taking the strategy on the 5-minute, like only using the first retracement candle, or is there a limit to how many entries you would take after the signal comes up? I mean, the main red flag that I'd be looking for, Madhu, is going to be overextension. I think that's probably the only thing that I'm looking for, because the thing is, price can keep going up for a long time. Like for example, over here. So see how price pushed up from this point over here? My overextension point's about 1,000 pips, right? So see how it got to 1,000 pips right here? Price started to consolidate a bit right here, right? Consolidate and range. So at this point, I would be a little more careful. I would look for an entry, but I'd probably be a little more careful. This happened on open, so it wouldn't really make a difference for us. I don't think we take any entries right here anyways to begin with. This over here, again, it pushes up to about 1,000 pips. So you can see at the 1,000 pip mark, it's usually where the retracement happens. It's just, but on the 5-minute, not necessarily going to be the 100 pip mark. It's going to be at like maybe 1,500. So at the 1,000 area over here, I would be okay to take entry, but at 1,500, that's usually where I'm going to be like, okay, I have to wait for the retracement. But you can see over here that price pretty much pushes up, consolidates, pushes it up, consolidates. This is where you want to be a little careful. But even at this point, it's already going to be 8 o'clock. So at that point, I probably wouldn't be looking for entries. But for the most part, I'm just looking for overextension. That's the main thing that I probably would be looking for. I mean, other than that, let's see. There's not really a limit of entries either, because we're only on the market for like about an hour. Like you're only looking for entries between 6:30 and 8. So there's not really a limit to how many entries, because at that point, you're probably gonna get like 1 or 2 entries between this period right here. So you can't really limit yourself. You kind of got to take what you can get. If you're trading after 8 o'clock though, then yeah, of course you want to limit your entries. I mean, I'd probably just chill from like 8 to 9. Or even 9 to 10, actually. You can see over here from 9 to 10, price pretty much goes sideways the entire time. It picks up back at around 11. But again, I wouldn't be trading after 8, so I wouldn't really need to limit myself. Because the thing is, you'll get a direction, price will retrace a little bit and continue pushing up higher. So yeah, I think the main thing to probably look for would just be overextension. That's going to be the main thing that I would look for. I mean, there's always going to be red flags, right? There's going to be things that you want to look out for. Sessions are probably going to be in the way sometimes. I won't pay too much attention. I mean, I look at it, but it's not going to stop me from taking the trade. You know, a lot of this stuff I can't really tell you because what I see when I analyze the charts is different from what you see. I can tell you that, okay, you should probably avoid the sessions, but how many people still trade at the sessions, right? It doesn't matter what I tell you. It matters how you perceive the market, because everybody perceives the market a little differently. I can tell you, I don't trade when price reaches overextension, right? But how many times have you guys traded when price is overextended, right? It doesn't really make a difference. There's a lot of red flags that you guys can look for, but it's really up to you if you want to avoid the trade or not. Because I'll tell you guys during the live session, like, hey, price is overextended. And what happens? You guys still take the trade. Or I'll tell you, hey, price is getting near a session. I'm not going to take the trade. And what happens? Still take the trade. So, I mean, you guys know what the red flags are. It's just going to be up to you whether you want to follow the red flags or not. So, I mean, trial and error is going to, you know, you're either going to get burnt, you're going to learn from it, or you're going to keep getting lucky and you're never going to learn from it. So, the same red flags apply, guys. But for the most part, for these types of entries, I'm mainly just looking for overextension. That's going to be like one of the main things that I personally will be looking out for. But even if that's the case, if price gets overextended, it'll just retrace and consolidate for a bit. And then from there, there's going to be another opportunity for entry. Like, for example, here, price retraced over here, went sideways for a bit. We had the opportunity for entry over here, and that's where the entry came up, or actually came over here. Price consolidated, pushed up. And this is why I know where the entry is, because it has my entry point right there. I entered the buy right here, and then I sold off right here. So yeah, just focus on overextension, guys. That's probably the main thing for you guys to look at. All right, let's see. Let me scroll up. Still got a couple of questions here. Shiv's asking, are we able to trade the 5 minutes until 12? I mean, you can trade it for as long as you want. If you want to trade it after 12, you can, but that's going to be on you guys, right? Like, again, like I mentioned, guys, I can give you guys like all the parameters here to follow. Don't trade when prices overextended. Don't trade when there's red flags. Trade till 12. But the thing is, you guys can keep trading. I mean, the main criteria here that I was telling you guys about is the ATR, right? So look, when price gets to 12 over here, like, I'm not gonna lie, I was personally looking for a trade after 12 today because I got home from the gym and I was like, okay, market's still moving. And it got around this point right here, and I was like, okay, ATR is still pretty high. It was at 18. So I was still looking for trades after 12. Even though, you know, I can tell you not to take a trader after 12, but it's just really up to your own preference. If you guys want to keep trading, you know, feel free, but just make sure to focus on the ATR. So ATR here is like at 18. So you can still probably trade around that point. See, the ATR started dying down around here. Where was it? At 11:25, right? Like, I can tell you trade till whatever time, but right here at like 11:25, ATR was at 17, is already dying down. So I mean, it's just really up to preference, guys. You guys can trade however, whenever you want, but don't expect quality entries to come out, you know, at a certain time. Like, I'm trading the 1 hour entry at like 4 p.m., right? That's like the worst time to trade, but I'm still trading it because the strategy works at that time. So you can literally trade these strategies whenever you want. It's just really, you know, if you're looking for quality, stay between the live sessions. If you're looking for lucky trades, then trade after the live sessions. But I mean, you can technically trade the strategies at all times. These strategies are based off momentum. If momentum is in the market, you can catch entries, even if it's after 12 or before 12 or whenever it may come up. You know, you guys will see pivot scalps that come up at random times, like at like 3 a.m. and they still hit because the volatility is there. So my main advice is you guys try to figure out what works for you. I'll never tell you guys to trade after 12. So it's really up to your preference. I see people trade after 12 all the time and they still profit using the same strategies. But for me personally, I'm only going to advise you guys to trade between 6:30 and 8. That's always going to be the time. You trade any time after that, you might get lucky, you might not. So it's just really up to your guys' preference. But yeah, CJ, you know, short answer to your question is yes, you can trade up until 12. but you're probably not going to get quality entries. Like you can even see over here, the entries were good until like 9 o'clock, right? And then market just went sideways from here. So yeah, technically you could have traded till 12 if you wanted to, but you probably wouldn't even find any, probably wouldn't find any entries, or at least not any quality entries between that period. As you can see right here, price pretty much died down to 850, went sideways for a while. Even though it went sideways, there were still entries here. So if you look over here at 930, ATR was kind of low, at 17, but you can see like, actually there's like no entries right here. Okay, so like for example, right here, this happened like at 1020, price pushed up, retraced right here. Entry would have happened over here at the 90 mark. ATR was 17. Trade got filled, went straight to TP. So I mean, just really, it's up to preference, guys. You guys can trade whenever you want. I mean, whatever session you want, but I'm always going to recommend that you guys trade between 6:30 and 8 because this is where the volatility is the highest. I mean, there's a reason why I trade between this time, right? If the market was so good after 8 o'clock, then I would be on the market, but I'm not. So this is like a sweet spot right here to take your entries because everything after that, price pretty much goes sideways. Not that it doesn't work, but it goes sideways. All right, so all right, let me go to Shiv's question. Sorry, Shiv, we've been like, well, actually, let me go to your question after Shiv, because a lot of these questions relate to like what we're doing right now. I want to get to your question, but a lot of these questions that are coming up are based off what we're looking at right now. So sorry, Shiv, we're going to get to your question eventually. Don't worry, we're going to get to it. But I'm going to keep answering these questions here because we're still talking about the one strategy right now. So sorry, my MC4 is logging off because the market is closing right now. All right, so William said, Sean, you had something around 5K today. Wow, wonderful. Once again, my 200K done, and I have the LLC being opened. I'm in business. Yeah, no, definitely. Not too many days away. We stacking accounts like you. Yeah, no, definitely, guys. Yeah, I think I had like about, so if you add up all my profits from today, so my FTMO number one was 1,980. I mean, if you just do the math, I think I added up. You guys probably saw the email today. So 1980 plus 1980 plus 540 plus 540 plus 540. So 5,580. These are from like my actual funded accounts on FTMO and MFF. This is what I locked in. And then on top of that, my top step account here, which was 975, was 6,555. So yeah, I mean, pretty decent profit. Like the key thing is like once you get good at like executing your trades, you just need to add multiple accounts to it. I'll send you guys a video on the YouTube later or on the in the chat later. There's a video that I saw and I sent it to a couple of you guys. It's really like they did they had the data on like who's like the most consistent and most successful people who are trading with like these prop firms. They're people who trade just like me. They just look for like that little profit every single day. They take 1 or 2 trades a day. They only take a few trades, but they're the ones that are consistent within the prop firms. Because the thing is, when you guys trade with a prop firm, like it's a different style of trading versus trading your own personal account. You can't let these trades run forever. You can't like pray that your trade will go back into profit. You have to have a plan set when you guys are taking a certain trade. The trades that we're taking here during these sessions. So if I find that video later, I'll share with you guys. But it's basically like a breakdown of like how to really succeed trading with prop firms because it's a different way of trading. It's not those unless you have like a swing account and you're swinging like crazy, but I don't swing trade, so it wouldn't necessarily apply to our trading strategies here. All right, let me see if there's anything else here that I'm missing. Richard asking, were you saying during a live session that a TP stop loss set to ATR can be applied to all the strategies and timeframes? Yeah, pretty much, Richard. So I mean, I can show you a quick example over here. William said I'm going to Equaway to trademark my company name after the LLC too. Nice, that's cool, William. Yeah, just tell. So I know the owner of that firm. I went to law school with her. So the owner of that law firm is Nadia. I just tell her that, you're with me and she'll help you out. She's good. She's good to like help you trademark and stuff. You guys want to trademark a company and stuff like that. She's solid. Yeah, her name is Nadia Akwe. I went to law school with her. She worked at the US Patent Office, so she was like working with the government in doing patents and stuff. So she knows her stuff around. All right. So other than that, I think those are all the questions. Yeah, no, definitely. Yeah, she's on the IG and she's pretty much on all on social media. So all right, so I think we're done with these questions here. Let me see if I missed anything else. Or I'll show you a quick example. So I'll show Richard a quick example of like what I just mentioned, right? So say for example over here, there's a pivot scalp entry, right? This is a pivot scalp entry. And then you're looking at the ATR here. Actually, no, this isn't a pivot scalp, sorry. Let me see if I can find an example. Okay, so for example, right here, this right here is a pivot scalp entry that happened at 10:30, right? So if you wanted to apply the strategy here, this is a pivot scalp, buy signal above the pivots are angling up, trend meter is green. You would set your ATR to 17 right there. And then you let the trade go. And that's pretty much how it would be applied, right? If you're applying like the snipe strategy or say a pivot scalp entry on say the 15-minute time frame, you do the same thing here, right? So again, right here, you have a buy signal, trend meter is green, price is above the pivots are angling up. You have the same setup here. ATR set at 20. So you set your ATR to 20 right there. And you can see right there, it works out perfect. Let me see if I can find another example. I don't know what the bias was today, but say, for example, you had like a V1 variation, right? So say there was a V1 variation right here. It's double body. I don't know if it was bullish or not, but we're just going to assume here that was bullish. V1 variation. You can see how it's ATR is set to 20. You got that set up right there. You let the trade run full TP. So basically all of my strategies here, you can sort of make them into a one-to-one if you want to figure out what the ATR is. The thing is, like, I've used this indicator for a long time. I don't know why I never thought to use this to figure out the TP stop loss would be. It's like all over the place. CJ's asking, is she in Houston? Yeah, I believe she's in, yeah, she should be in Houston. Let me check. Believe so. Let's see. River Oaks is where it's tagged at. Yeah, she's in Houston. Yeah. So Nadia's in Houston. She works a lot with like Latoya Luckett, the singer. See, you might see Nadia. She's always like she's in the media. So you might see her in the media a lot. She helps out a lot of like she's been on the news, like Fox 26 News. So you guys, if you guys are in Houston, you might have seen her like on TV or something like that. She was like one of my close friends in law school, so she helped me out with my trademarking and stuff like that. She's good. Yeah, she has like a very like distinct last name way. It's not a common one. All right, so let's see. Maria is asking, does it work with the 1 minute strategies? So it works with the 1 minute, Maria, but you have to be really fast, right? To use the 1 minute. And the thing is, the ATR is not always going to be high on the 1 minute. So for example, you're trading here on the 1 minute. Like say you wanted to trade outside of the New York session, right? Your ATR is going to be 5 points. That's not even worth trading. So it does work on the 1 minute, but you have to be very quick when you're taking these trades. Like for example, you're not going to be trading right here when the ATR is so low. But yes, the strategy does work on the 1 minute as well. So for example, right here's a V1 variation, right? V1 variation right there, the ATR is set to 17. So again, same thing right there. You have your ATR set to 17, TP stop loss set to 17 right there. Price goes up, full TP. right? So it works. It's just you have to be very quick because these 1 minute candles happen so quickly that you're either going to make a mistake or you're going to miss the yeah, exactly. Maria said speedy Maria. Yeah, you got to be really fast, Maria. It works, but you have to be very fast. And if you were to do this, you have to trade directly on TradingView. Like if you're doing a top step, it's probably possible because you can just enter the trade and then put the percentage and then just set your trade up very quickly. If you're doing it on MT4, it's like near impossible. I wouldn't do it on MT4 because you have to adjust your TP stop loss very quickly. But if you're trading with top step and you're going directly on TradingView right here, then at that point, yeah, I would think it'd be possible for you to do something like that. So again, for example, right here, let's see, there's a momentum or pivot scalp, 7 o'clock. Entry would be right there. ATR is set at 21. You got that set up right there, full TP. So it works, Maria. It's just, I mean, if it's hard for me, it's going to be hard for you, right? It's going to be hard for everybody if something like this is something that you're trying to do. Not that it's impossible, but it is going to be difficult to execute. So let's see if there's another entry here that we could possibly look at. Market was kind of slow today. It was kind of back and forth. Okay, again, right here, pivot scalp right there, ETR is at 17. Let's see if this plays. This one doesn't play out. So that's why it's important that you're able to set it to 1%. Because if you lose a trade, it's just a 1% loss. It's nothing too big. You can just make it back on the next trade. But yeah, it does work on pretty much all time frames. Pretty much all strategies and all time frames. Like if you want to trade on like the 1 hour, right? Say you trade on the 1 hour over here, and I don't know, like say you have an entry. You probably wouldn't trade US 30 on the 1 hour, but if you were to trade it on the 1 hour, say you were trading something like your USD, right? That's probably something that would be normally traded. Like for example, over here, you're trading your USD like a Forex pair, and you're doing the same thing, right? I don't know what the ATR should be set to, but for example, you have a pivot scalp right here, right? Pivot scalp on the 1 hour, sell signal below the pivots, trend meters red. This basically doubles up as a pivot scalp entry and an intraday scalp. Right here, the ATR is set to 13.4. So 13 pips, about 13.4 pips. You got it set up right there. You let the trade run, full TP. So it doesn't matter what you're trading with. If you're applying my strategies, the ATR works on whatever you want to trade on. If you want to trade something like GJ, I'm just looking at stuff that everybody likes to trade. GBP, JPY. But when you're taking trades like this, your risk is going to be very important. You want to make sure that you're not over leveraging. These trades are never guaranteed. That's why you want to make sure that you're setting it properly. I actually started trading Forex last night. I traded EJ and I made a pretty nice profit. I mean, it's not there anymore. This is the trade I took. Basically, I took like a reversal type pattern trade right there. Again, right here, same thing with GJ. You have an entry right there, momentum scalp, pivot scalp. Same thing again. Your ATR is set to 28.9, so 28 pips. Let the trade run. Full TP. It basically just lets you, it helps you identify what the TP stop loss should be for a 1-to-1 risk reward. So yeah, if you guys want to play with it, feel free to play with it. But I mean, there's a lot of different ways to apply it. All right, so I think I'm finally going to be ready to answer your question, Shiv. Sorry it took so long, but let me show you an example. So Shiv is asking, Sean, could you clarify the liquidity entries you seem to do every session? For example, today you mentioned one and Thursday you took as well. Yeah, Shiv. All right, so let's go over here to the to our liquidity charts. So, the thing is, I was trying to use the ATR here to identify entries for liquidity too, but it's kind of harder because your entry points are like based off movement, not necessarily based off retracement. So let me show you real quick. All right, so let's just rewind to this morning. So let's rewind over here to 6:30 a.m. so that you can see how we mark up liquidity like we do every morning. All right, so this is how we apply the liquidity strategy shift. So I start off with the daily time frame. This week and last week, the daily liquidity has already been hit. So we've been using the weekly. You don't necessarily need to use weekly, but when there's no levels there, you just go up to the higher level. There was no buy levels for us to take. So right here, I go to the weekly time frame. I usually go from the daily. So I'll go from the daily 8 hour, 4 hour, 2 hour, 1 hour, 30 minute. I basically go half hour or the half time. So if I go from daily, I'll go from daily to 8 hour, from 8 hour, go to 4 hour, from 4 hour, go to 2 hour. Half of that is 1 hour, half of that is 30 minute, half of that is 15, 10, and that's pretty much it. I don't go anywhere lower than the 10. You can go anywhere 10 minutes and above, but anything below that's just going to be noise. So starting off over here at the weekly time frame, the reason why I do that is because if you go here to the daily, there's no high lows here, right? There's no liquidity here. So it's kind of pointless for us to go to the daily. I just go down to the weekly. So this is the weekly time frame. The only indicator that I have open here is going to be the high-low indicator. So you can see over here, I have the high-lows marked up. This is what the chart looks like without my high-low indicator. I turn on the high-low indicator here. And what I do is I identify where everybody's stop losses are sitting. So right here on the weekly chart, if people are selling, I'm identifying these high lows that have not been tested as the levels of liquidity. So what I do here is I mark up these levels. So anything above 1 hour, I color it blue. Anything below 1 hour, I color it red. So this is the weekly liquidity right there. Basically, I'm going to be marking up all the levels that have not been tested. If this level has been touched, it's not going to be useful to us. Like, for example, right here, we have a low right here, right? But this level has already been touched, so it's no longer useful. So I'm not going to mark that up. I'm only marking up levels that have not been tested yet. So those are all the weekly liquidity that has not been tested yet. Now we go down to the daily. You can see there's a couple more right here. In order for it to be established, 4 or 5 candles have to pass where that high low is. So for example, right here, there's a higher high right here, right? But I'm not going to mark that up because 4 or 5 candles haven't passed. The reason for that is because if price pushes past this area, this is going to be invalidated and there's no longer going to be a high there. So I just keep going lower right here. Again, another low that's been tested or that hasn't been tested. And then pretty much all these levels here are marked up, right? Now we go down to the 8 hour time frame. And we do the same thing. We just go down to every level to identify all of these levels that have not been tested. Now you go down to the 4 hour. That right there. There. Go down to the 2 hour. There. And I'm pretty much just doing the same thing over and over again. I'm just marking up. Right there has been tested, so that's not going to be a valid level. Right there. Go down to the 1 hour. And now we go down to the 30 minute. So from the 30 minute and up, I change the color to red. The reason why I colored red is so I know that this is a low level liquidity. It's not like a good level liquidity. This can easily just be, like just a fake out. Because most people who swing trade, they try to go above the 1 hour time frame. You go anywhere below the 1 hour time frame, this is a lot of times it's just noise. It's like scalpers, day traders. There's not enough liquidity sitting there to really push price. Like that's where people's stop losses are sitting, but it's not enough to really push price in that direction. So I just mark them up, but I don't necessarily look to take entries at those red lines. I just use those as a confluence. All right, so once I'm done with that, I go back to the 1 hour time frame. And that's how the chart looks, right? Then I add on my extra stuff, like I'll add on my pivots and momentum just to see where price is likely to go. So I have a direction. So if I see price pushing up, I'm like, okay, if price reaches this level, it's probably going to blast right through it, right? So market open right there. At this point, we have liquidity marked up. Is there any questions at this point, Shiv? Or are you good with how I identified liquidity? From here, I'll move on to the next step, and then I'll show you like where the entry points would happen. Yeah, Shiv said following the marking element on all time frames up to 10 minutes. Yeah, exactly. You don't have to use the same time frames as me because they kind of overlap sometimes. Like sometimes the 10-minute will overlap with the 15 will overlap with 30. So you don't have to use the same exact time frames as me, but try to use at least like multiple time frames to identify where liquidity is sitting. Once you have that set up, you pretty much know where to make entries at this point now. So we go back to the 1 minute time frame, and then from here we wait for price to hit these points. So in the morning, I'll typically tell you what the bias is, right? If the bias is bullish, then you're looking to take buys right here. So basically what you're doing here is you're identifying where people's stop losses are sitting, and you're just going to cash that liquidity. Like, so for example, if price reaches this point right here, this is where you would take your liquidity. The liquidity on open is usually the biggest move. So we typically go for 300 pips both ways. The market's going to change depending on market conditions. So if the market's slow, we only go for 100 pips. Market's fast, we go for 300 pips. The market's very fast, we go for 500 pips. Right now we're in the summer conditions, so it goes between 130. Right now, I think the market was kind of volatile this morning, so the original move would have been 300 pips here. You can see right there where the trade got filled. Right there at 300 pips, price pushed through. And you can see right here that it goes straight to full TP right there for 300 pips. So as I've mentioned before, and I mentioned in the past, if the market's slow, instead of going for 300 pips, then you would only go for 100 pips, right? So for example, the market's fast right now, but say for example, it was moving like slow candles. If it was slow candles, then you would only go for 100 pips, right? Because you just want to be in and out of this position very quickly. So for example, if you went for 100 pips only, see right there, it would have blasted straight through to your TP, like no drawdown, straight to your TP. So for the first level, you can do a 300. For every other following level, you only want to do 100 because at that point, price is overextended, right? So for example, you have a win here already. And now you're like, okay, I'm going to go for the next one, right? Which is up here. Next level is going to be up here because this is the next level of liquidity. If price is bullish and you have a bullish bias, price pushes back up right there. That's where it fills. And go straight to your TP right there, right? There you go, 2 back-to-back wins. Again, same thing on the next level up here. It's pretty simple. It's just like, you're just identifying where people's stop losses are sitting and you're capitalizing on them losing. So when they hit their stop loss here, I'm sure you've heard of a stop loss hunt. We're basically identifying where these stop loss hunts are sitting. The thing is, like, a lot of people don't know where these stop loss hunts are happening because they don't have my indicator. Like I created this indicator specifically for this strategy. So we have an upper hand here because we're seeing things that a lot of other people can't see in the market. You can do it by hand, but it's like very difficult to do it by hand versus using my indicator here that pretty much does all the work for you. So again, right here, price pushes back up. Here goes the next level right there. And you can see right there, it pushes around a bit and this one doesn't hit. So here's one thing though that I want to explain. So remember I mentioned earlier, these red levels are usually like the weaker levels. I probably wouldn't have taken these trades and I didn't take them today because I knew they were weak levels. The thing is, they'll hit a lot of the times, but if they get overextended. So for example, we talked about overextension earlier. Let me just show you real quick. All right, so the push happened from right here, right? This point. If you measure it and price has already pushed up about 1,000 pips, actually it started from down here. Market open at 630, right here, 630. So this is where market opened. And you can see where price pushed up at this point. I consider this overextended. On the 1 minute time frame, 75 is usually the overextension point. On the higher time frame, it's going to be 1,000, but on the 1 minute, it's going to be like 75. You're going to go in increments of 25. So starting from 50, you can see over here, market open, price pushed up, retraced down, goes up to 75. Price pushed up to this point, retraced down again, and then 1,000, of course. So there's just different increments when you're looking for, and you're going to see over here where price kind of bounces around a bit. This blue level right here would have been good because this is a weekly liquidity. We didn't actually enter right here, but we entered because this lined up with our entry right here, where we came back for the retest, and then it ended up shooting from this point here. So, I mean, there's different ways to apply it. It just depends on the market conditions. If the market is moving smoothly, then, you know, you would take certain trades in certain directions. If not, then you just sit it out. Like, for example, I sat out this whole area right here. So I didn't take any trades around this area. And I didn't really get in until like price came up here to the weekly liquidity. All right, guys. So if there's any other questions, feel free to put them in the chat. We've been on this session for about 2 hours now. About time to take a break. I'm losing my voice now from going over for so long. But yeah, if there's any other questions, guys, feel free to put your questions in the chat. Otherwise, I'm going to wrap this up, and then we'll be back here tomorrow for the next live session. So I think that might be about it. Yeah, one question from Shiv. Shiv's asking, Sean, quick question. When do you mark this? Daily or weekly? I do it daily, every day before market open, Shiv. So like I'll wake up at about 5:30. I'll get on the chart around 6 o'clock, 6:30. Like as soon as I get on the live session, if you get on the live session right away, Shiv, like immediately in the morning, I'll mark it up. So as soon as I send out the link to you guys around 6:20, 6:15, like whatever time that is, the first thing I do when I start the live session is I mark up liquidity. So I do it fresh every morning before market open. And then that's the only time I mark up liquidity. I don't update it over the day. So I just mark it up in the morning so I know where all the levels are sitting. And then that's pretty much it. Just every day before market open. Yeah, Shiv said, thanks, man. I really cleared it up. Makes sense. We'll apply it tomorrow. Yeah, definitely. Yeah, CJ said, thanks, Sean. Excited about the 5-minute pullback. Me too. The 5-minute pullback it's a lot calmer than the 1 minute. It's not as crazy, and we have a lot more opportunity for entries. William said, this is a really good session. The hour and a half went by so quick. See you all tomorrow. Thank you, Sean. Definitely, William. So, all right, guys, that's going to be about it. I'm going to call it a day, and then I will see you guys back here tomorrow for the next live session. Sorry, guys. If you guys have any questions, feel free to reach out. Otherwise, I will see you guys here.